Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we would be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. First up, coming to the update in the global markets in trade yesterday. So in yesterday's trading session in the US markets, that is, CPI inflation data which came in led to positive sentiment in the US market. The data was received positively by Wall Street, and all the three major indices, if you see, have marked a fresh all-time high. The S&P 500 has given, if you see from a technical parameter, it has given a stage 2 cup pattern breakout on the daily scale. In addition to that, it has formed a sizable bullish candle on the breakout day yesterday, which adds strength to the breakout which is currently seen. So going ahead, it is likely that the index may continue its northward journey and test the levels of 5,400 followed by 5,550 in the short term, while support for the index is seen closer towards 5,170, 5,200 levels. In trade yesterday, Brent crude also formed a bullish hammer candlestick pattern. If you see, it is still broadly trading in the range between 81.50 and 84.30 levels. So till the time it's in a range, it's positive for us. Any breakout from this range will lead to a trending move in either direction. Looking at the dollar index, so the dollar index has witnessed a sharp fall in trade yesterday, and it has ended below 104.20 levels. Along with this fall, it has started to sustain below its 50 and 100-day EMA levels on the chart, and it seems heading towards 103.30, which is a positive for an emerging market like India. Coming to the update in Nifty. So in trade yesterday, the benchmark index traded in an extremely narrow range of 146 points. If you see in comparison terms, this was the lowest daily range for the index in the last 7 trading sessions. This resulted in the formation of an NR7 pattern, a narrow range 7 pattern. On the daily scale, it has formed a small body which is bearish with the shadows on either side. Looking at the derivative data for Nifty, so the ME futures has witnessed a minor dip of 0.1%, and the cumulative open interest, that is for the 3 series, that is current, next and fast series, has dipped by nearly 1% in trade yesterday. Among the constituents of Nifty index, 6 stocks have witnessed long built up, 15 stocks witnessed a short covering rally, 19 stocks witnessed short built up, and 10 stocks have witnessed long unwinding. So this is based on data in trade yesterday. If we see the current weekly series PCR, that is for today's expiry, we have PCR currently at 0.74. The max pain is at 22,200 strike, while for the May month series, the PCR is at 1.09. If you see in terms of the strike prices, significant open interest addition are visible at 22,200 and 22,300 strike. If the markets based on the current gap up opening is able to sustain during the initial hour of trade, we could witness a bit of short covering in these particular strike prices. While on the downside, if you see for the put option, it is mainly concentrated in 22,200 and 22,100 strike. Talking about Nifty levels, so on Wednesday the index has witnessed a price rejection near its 20-day EMA and 50-day zone, that is the levels of 22,290, 22,310, and thereafter it has witnessed a minor correction. However, taking into consideration the gap up opening today, the zone of 22,330, 350 will act as the immediate crucial hurdle for the index, and any sustainable move above the levels of 22,350 will lead to a continuation of this rebound move, which the index has been seeing towards the levels of 22,500. On the downside, the zone of 22,180, 22,220 will act as the immediate support for the index. Now coming to Bank Nifty, so on the expiry day, so yesterday was the weekly expiry for Bank Nifty. Bank Nifty marked a high of 47,957, and thereafter it witnessed a minor correction. It has ended below 47,700 mark with a loss of 0.36%. On the daily scale, it has formed a bearish candle with a minor lower shadow. Currently, the index is hovering around its 50-day EMA, that is 47,707. On the derivative front, if we see, the May futures for Bank Nifty has dipped by 0.38%, and the cumulative interest, open interest, that is, for the 3 series has surged by nearly 5.34, indicating overall minor short built up in Bank Nifty in trade yesterday. If we look at the PCR figure, that is for the weekly, that is next series weekly expiry, it is currently at 0.76, and the May month expiry, that is the PCR, is at 0.75. If we take the strike prices for the day, if you see the levels, that is 47,700, 47,600 will act as the crucial support for the index, while the resistance is seen at its 20-day EMA level, that is 48,050, 48,150 levels. Any sustainable move above the levels of 48,150 will lead to a sharp upside rally towards 48,400, followed by 48,700 in the coming sessions. Now coming towards the market indicators, so in trade yesterday, the volatility index, that is India VIX, has oscillated in a narrow range between 20.65 and 19.87, and finally ended the day at levels of 20.27 with a gain of 0.38%. Going ahead, the zone of 20.9021 will act as the immediate hurdle for the index, while on the downside, the zone of 18.5 will act as the immediate support. The advance decline ratio in trade, if you see, was largely tilting in favor of the advancing counters with the broad based participation, while the large cap counters relatively underperformed. Coming to the key sectors in trade, so we saw Nifty CPSE and Nifty PSE having a strong trading day yesterday. The strong base is formed near the support zone and witnessed a smart rebound in trade yesterday. The daily RSI for both the indices is currently in a rising trajectory, and hence we believe that these sectors are likely to outperform in the short term. On the flip side, if we see, it is Nifty IIT, Nifty Media and Nifty FMCG. These are the sectors that we believe are likely to underperform in the short term. Coming to the FII data, so FIIs have been constant sellers in the cash market for a long period of time, that is, and in trade yesterday as well, there were net sellers to the tune of 2,832 crores, while DIs bought to the tune of 3,788 crores. FI long short ratio for index futures has further dipped towards 27.58 on a net basis, this as they sold about 32,108 index futures yesterday. On the stock futures front, FIs has sold to the tune of 37,466 contracts, while on the options front, FIs sold 35,906 call contracts and they sold 30,232 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.